Hi, and welcome to our video series for first-time homebuyers. I'm Tammy Wagner with Lakeshore Realty, and I'm going to talk today about just thinking about, are you ready for buying a home and what the process is for buying a home. So let's first talk about some definitions, some things that you'll hear as you start to think about buying a home. You're going to hear about credit rating. That's your credit profile. It's computer generated based on your payment history and the credit available to you. It's an important number and a number that you're going to want to talk to your lender about right away. Down payment is the portion of the purchase price that you're paying in cash when you go to buy a home. And in fact, in a lot of situations, as you've heard with Laura from Mountain West, you don't need to have a down payment. You don't need to have some money down. There are 100% financing programs available. Closing costs is another term you'll hear, and that's the costs for buying a home. Lender fees, escrow fees, taxes, insurance, prepaids. There are a bunch of costs involved in buying a home, and you'll need to be aware that those are going to be costs to you when you make an offer. There is a homeowner's exemption in Idaho, and if this is your permanent residence that you're purchasing, there is a deduction in your taxes for home ownership. So that's something important that you'll hear about when you start the process and when you go through the closing process. The mortgage is obviously the loan amount that you received from the bank. I want to talk a bit about a short sale. The short sale, the definition of a short sale is basically that if you're buying a home where the current homeowner owes more on the home than what it's worth. So the mortgage is actually more than what the home is worth. And then you're negotiating with a bank. And the bank is the one making a decision because the bank is the one who's taking a hit on the amount of money that they're getting. Equity, that's another term you'll hear. That's the difference between what your property is worth and what you owe on it. And then pre-qualification, Laura talked a little bit about that, but it's important to get pre-qualified before you start looking at homes so you know what you can afford. We're going to talk a little bit about buying versus renting. Certainly, home ownership is for some people and not for some people. Renting can be less expensive. Even if you look into buying and the cost of the mortgage, taxes, insurance is less than renting, the total cost could be more. So you have to think about things like lawnmowers and other costs involved in home ownership. Certainly with renting, you don't have as long term of a commitment. You obviously can sign a 6-month lease or a year lease. But with the home, with purchasing a home, you want to think about being in a home for 3 to 5 years. There are costs involved in buying a home, and there are significant costs involved in selling a home. So it's important that you think about that when you're making a decision to buy. Certainly with renting, you don't have maintenance. If something breaks, you call the landlord, hopefully they come and fix it. If you own a home, something breaks, you call the repairman, you write him a check, or you go out to the store and you buy a new one, but it's going to be all on your dime. And then appliances and services are typically included in renting, and they're not in home ownership. You have to mow your own lawn. You have to shovel your own snow. So those are some things to think about too. There are, stats that show that home ownership brings a sense of community and stability to our community, and so it's a great thing for the community. It's good for the economy, and it gives you a sense of accomplishment. Obviously, it's the American dream. You also get some tangible benefits like deductions on your taxes for your interest, for property taxes, things like that. You're building equity in your home every month, and you're not building equity in a rental. And it really does benefit the economy by pushing other buyers up. So if you buy a home at $125,000 and you push that $125,000 owner up into a $175,000 home, that helps the economy. In terms of can you afford to buy, it's important that even though you may be getting 100% financing, you recognize that there are costs involved in buying a home up front. Earnest money, typically $500 to $1,000, deposited when the offer is fully accepted, so that's important that you have that money. You're going to want to have an inspection, and inspections are typically $225 to $300. That's going to need to be something that you put out of pocket before you close on the home. There may be a down payment involved depending on your financing. And then you've got closing costs, which are typically financed in these days. So you may make an offer on a home and finance in the closing costs so that they aren't out of pocket. They're actually included in your mortgage. And then you've got moving costs. Moving supplies, movers potentially, utility hookups at your new home, Those things all cost money. So it's important that you do have a little bit of money, even if you're getting 100% financing. How much can you afford? You know, you can go to a bank and you can go to a lender and you can talk to them and they can tell you how much you could afford in terms of your financial situation. But think about how much you want to pay as well. So if they tell you a number, you don't have to spend what they say you can. You can think about the number that you're comfortable with and try to stick to a number that makes you comfortable and makes you feel like this is a good decision for you. The next thing you want to think about is what kind of home you need or want. You know, there are homes with little yards and big yards. You know, think about, do I like yard work? What's the most important to you? A basement, the fireplace, the size of the home, the location of the home. What style of home do you want? Rancher, split level, 2-story, rancher with a basement, multi-level. There's lots of different options. Go on the internet, take a look around, see what kind of interests you the most. Think about where you want to live. Think about if you want to live in a rural area or in a city area. You also should consider the type of financing you're getting. That may dictate where or what type of home that you can buy. And obviously that's a bit more of a detailed discussion that we can get into later on. But USDA, FHA, or conventional, those all may have restrictions on the type of home you can buy. How do you get started? The first thing that we always say is that you need to talk to a lender. Know what you can afford before you start to look so that you don't get disappointed or you don't undershoot on what you can do. Make a solid list of your top priorities, and it may sound a little bit blasé or not needed, but you will forget as you start to look at houses exactly what was most important to you when you started. So, you know, make sure you think about your needs and your wants and what you'd like to see. And then start looking at houses, and a realtor can help you look at any house, no matter who it's listed by. So if you're working with a realtor, call them if you see a house, even if it's listed by another agent, and they can get you information on it. Working with a realtor, you can have different relationships with a realtor, and that realtor will talk to you about agency relationship when you first start talking to them. Customer versus client is something that we'll talk to you about when we meet with you. A realtor for a buyer doesn't cost anything, so the cost for you is zero. The seller has hired an agent to sell their home for them, and that seller has agreed to pay realtor fees, and those realtor fees are typically split between the selling agent and the buying agent. So for you as a buyer, you're not typically responsible for costs involved with hiring a realtor. But what you should expect your realtor to do for you is coordinate. They are the quarterback. They're the ones who coordinate helping you find a home, helping you find a lender, helping you get into title companies, working with your inspector. They coordinate everything to make sure that everything runs smoothly for you. And they also will walk you through all the paperwork, help you understand exactly what you're doing, and then negotiate on your behalf. The offer process, I'll walk through quickly, is simply if you find a house you like, your realtor will walk you through a purchase and sale agreement and you'll make an offer on that house. At that time, you'll have to give them earnest money. You'll give them a check for whatever you decide between you. There will be contingencies in your offer. So there'll be an inspection contingency, at a minimum, an inspection contingency and a financing contingency. And those will be dealt with during the first typically 10 days after you make the offer. Then you may have counter offers. You may go back and forth a couple times with the seller on what the price is, what the terms are, etc. Some tips, in terms of negotiating, think about what your closing time frame is. That may be a good button for the seller if you can close quickly, if you can make it a longer escrow. Assess your tolerance for losing a home. If you are committed to a home and you want to get it, that's a different approach than if you're like, oh, if I get this house, it's great. If not, there are other houses. So just think about that as you start to go through this. In terms of the market right now, there are certainly houses moving. Anything under $250,000 is moving much more quickly than anything above $250,000. Certainly the market is starting to look better. The interest rates are still low and making it very approachable for many buyers. So if you're thinking about buying, definitely give us a call and we can help you. Thanks for joining us for our video series, and I hope it's been helpful for you.